Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Shal D'Souza. Along with me, I have Vinny Motiwala as well as Avan Dubash. A very good afternoon to you, ladies. If you look at the markets, Avan, right now we are building on to gains. We surpassed our 17,800 mark at one point in time. Thought that this one also would be a very lackluster trading session, isn't it?
Absolutely, but it looks like we're building onto those gains. So now up by about 0.5% or so. For the Sensex ditto, 60,300. You've got a lot of strength coming in from the rate sensitive, so sectors like banks as well are adding to the mix, and support coming in from the broader universe. What's also helping is the fact that the CAC and the DAX have gotten off to a fairly decent start, so support from the global markets too is what's aiding the momentum. And the gaining list is extensive. It's Divi's Labs at top of the heap with a solid 8.5% gain at 31.81. That's where the stock is at. You've got Bajaj Auto, which is contributing. Dr. Reddy's, Adnai Enterprises is looking strong. Asian Paints along with Ashesha Motors. Tata Motors as well in the green. HDFC Bank, Apollo Hospitals, M&M. Those are some of the top gainers. TCS, prior to its quarterly numbers, where remember deal momentum is likely to remain intact, that stock is just about laying low pretty much for the most part of the trading day and now holding out by about 0.5%. Nestle in the red, BPCL, IndusInd Bank along with ONGC. Those are some of the other losers pre-trade.
Absolutely. On that note, then let's just get started with all the stocks that are buzzing in trade, either on the back of news flows or on technicals. On technicals today, we're joined by Sumeet Mulchhandani, while from the research team, we have Ashesha as well as Vemakshi joining in with us. A very good afternoon to all three of y'all. And I'm going to be starting with the first stock, and that is Adani Enterprises. Now, this is among the top Nifty 50 gainers today. I think it's among the top names that we have. Now, why is the stock buzzing in trade? Is because Adani Enterprises has actually set up a wholly owned subsidiary unit named the Pelma collieries for developing and operating coal washeries. The wholly owned subsidiary is actually going to be carrying out business to develop, operate coal washeries, including coal handling systems, and to do all the necessary and incidental activities regarding to that as well. Now, this wholly owned subsidiary will commence its business operations in due course. That's the word coming in the press release that came in yesterday from Adani Enterprises last evening. And since the get-go, we've seen that, obviously opened up a bit lower, but since then, holding on to gains of more than 2% in trade.
All right, moving on, let's talk about Time Technoplast, and this one is a buzz in today's trading session on back of an order win. At one point in time, if you look at the stock price, it was trading higher by approximately 5%, giving up those gains right now. Some of those gains is now trading higher by about 3%. It had hit its highest level since February 27. The company informed the exchanges that it has received order from IGL for supply of CNG cascades worth about 54 crore rupees, and on back of that order win, the stock is a buzz in today's trading session.
All right, let's move right on then to the two newsmakers of the day that are certainly hogging the limelight, and that's BHEL and Titagar Wagons. And that's on the news that the companies in a consortium have been awarded to supply Vande Bharat trains. This is to the Indian Railways. Now, the technology partner has a consortium formed by BHEL and Titagar Wagons. They have received this order to supply 80 sleeper class Vande Bharat trains. The time period is about 72 months. They're going to undertake a comprehensive maintenance of the same for 35 years in accordance with the term agreement, which includes manufacturing cum maintenance for the Vande Bharat train sets, including the upgradation of the government manufacturing units and train depots. The rate is about 120 crore rupees per train, and an additional order for AMC has also been placed for about 35 years. You've got the stock price of Titagar Wagons, which was quoting close to its 52-week high, around that 295 levels. The 52-week high is about 310, and BHEL as well is up about 1/3%.
Let's keep an eye out of that one. But moving on, let's just shift focus to a fertilizer stock name, and that is FACT, or as we know it as Fertilizers and Chemicals Travancore. And this is what Sumit is going to talk about on the charts. Today, the stock has seen an up move of 20%. Obviously, yesterday that announcement came in from the IMDb of a normal monsoon, and since then we're seeing fertilizer stocks have been buzzing. Sumit, how are the charts looking like for this one? This has already seen a stellar move in the last couple of months as well. How much more upside?
Hi, good afternoon to all. So last week also we discussed the same stock, and that it was in the 5% upper circuit. Today the stock is in the 20% upper circuit. So we advise for the targets of 267 and 293. So first target has been achieved and second is on the way. But 293 will be the next level, or you can say as a hurdle. So if able to cross and sustain above, we are expecting more upside for the target of 337. But always booking profit is much more better than looking profit. So we'll advise to either book some quantity, or else one can hold with the trailing SL of 254 on the closing basis.
All right, so that's the take coming in on fact, which is soaring in trade with the rest of the fertilizer pack as well. But Ashesha, coming to you, let's talk about the stock of the day, the one that's going to hog all the limelight, but post-marketers, TCS.
Well, yes, and this time around, TCS is expected to report lead revenue growth among top tier 1 IT companies. Dollar revenue is expected to see an uptick of about 1.9% on a sequential basis. Higher utilization and currency tailwinds, meanwhile, are expected to expand margins. We are expecting margin expansion of about 50 basis points on a quarter-on-quarter basis. Macroeconomic situation, however, might lead to delays in revenue conversion, but large deal signings are expected to remain largely within that $6 to $8 billion band which the company has guided for. ICICI Securities, meanwhile, says that they expect TCS to announce a buyback to the tune of 20,000 crore rupees. FY24 guidance will be one key parameter to watch out for. Apart from that, commentary on BFSI segment, margins, attrition trajectory, hiring trends will be something that we need to watch out for. So all eyes on TCS, which will be reporting its numbers post-market hours today.
All right, there you have it, TCS. All eyes rained in on this one as it will be posting its quarterly show. Moving on then, right back to Pharma, Vemakshi and Biocon in the spotlight today.
Well, this stock is definitely hogging the limelight today on the back of a brokerage note that has come in from Bank of America. While they've reiterated their buy rating and in fact given a target price of 330 per share. Now, we've seen that the stock has corrected on a year-to-date basis by around 14%, and this was largely driven by it was largely flow-driven on account of the MSCI deletion as well as the large shareholder exiting the company. Now, at the current levels, the risk-reward seems quite favorable for the company, with Syngene stake and generics business contributing nearly 150 as far as 150 rupees per share. Now, the competition and price erosion has led to some concerns on biosimilar market being like generics, and in Bank of America's opinion, this is unwarranted given different commercial dynamics, better visibility as far as competition is concerned, as well as higher margins even with price erosion. Now, they are seeing some improving trends in the US market, higher margin, and these factors are actually being overlooked by the street in their opinion. Quarter-on-quarter revenue momentum as well as the pipeline could be some key catalysts for the stocks going ahead. So on the back of that brokerage note that has come from Bank of America, that is the reason why Biocon is in focus today.
Let's move on and talk about Info Edge on the charts. Sumit, how are the technicals for this one? What are the levels that we're keeping an eye out on?
Yeah, if you see on the weekly time frame, the stock has made a double bottom at the level of 3350. So in the February month, there was a sudden fall in the stock of around 10 to 12% in a single session. So today we have got a breakout of that range. So it's looked good, and still it is on the upper price of the day also. So we are expecting 3940 and 4010 levels in the next 15 to 20 sessions. One can keep a stop loss of 3730. Current market price is around 3820.
Okay, let's move on and talk about another pharma name, and this one is soaring in trade. It's up 9%, almost 9% as of now, and that is Divi's Lab. Now, this is according to industry export data and analysts, where they're saying that Divi's export shipment in March 2023 has jumped to $92 million versus $55 to $60 million on an average in terms of the last 10 to 11 months. March 2022, similarly, they had jumped to 81 million versus 50 million run rate, which was in the prior 11-month period. On the back of this data that has come in, we are seeing that today Divi's Lab has just picked up pace in trade and up 9.16% as of now, standing at 3,195 rupees.
All right, Divi's Laboratories soaring in trade based on news flow. There is 9% uptick coming in for Divi's. But Sumit, on the charts, do you think that this up move for Divi's will continue going ahead, since we are entering the quarterly earnings season? We've seen what has happened to the show quarter after quarter. Right after they announce their numbers, you've seen the stock actually tank in trade. But do you think this time around things will be a bit different for Divi's, given the fact that the export data also was positive?
One of the highest gainer in market today. So in the August 2020, it has made a gap up, and that gap was filled just 10 to 20 sessions previous. So in the weekly time frame, if you will see, a perfect gap was filled and that took a support also. Now today a good candle has been formed. Okay, now there is a hurdle of 3200 to 3250. So we are expecting some profit booking. It is not a downside, but there is some profit booking. So use this dips in for the buy. Above this the level of 3250. We are expecting more higher levels of 3600 also. So one can keep a trailing stop loss, and a trailing stop loss can be the low of today only. So just accumulate this stock.
All right, let's move on. And DVs is not the only high flyer in trade today. Today, Venus Pipes also was soaring in trade. It actually hit a fresh record high levels in today's trading session. And why is that up move coming in Venus Pipes is the fact that investor Ashish Kacholia has bought about 4 lakh shares at a price of around 750 rupees per share, while Nuvama Wealth Finance sold about 1.38 lakh shares in the particular counter. If you look at the stock, it's seen its biggest one-day jump since mid-October. It is gaining for a third consecutive session. The fact that you have a marquee investor like Ashish Kacholia entering afresh in Venus Pipes, the stock is soaring in trade. Right now it's trading higher by about 7%. At one point in time it was trading higher by about 9% or so. And that's one of the high flyers on back of marquee investor entering.
All right, let's get a move on then and Sumeet discuss Bharat Forge. Pretty quiet in the last 1 month or so. What is it that you're foreseeing on the charts?
On the lower time frame for a swing trade, it has given a good trend line breakout also and made a double bottom also. So today in the first half session, the stock is showing a good strength and currently also trading at the 770. So it looks attractive for the small swing trade only. So one can accumulate at the current market price and dips also. Keep the stop loss of 755. We are expecting 800 and 820. These two levels can be achieved in the next 8 to 10 sessions.
Okay, let's move right on then and focus in on another newsmaker, and that's Delta Corp. Came out with its numbers post-market as yesterday. The revenues came in higher by 4% to 227 crore rupees. This is for the fourth quarter. Net profits at 51 crores was up about 6%, and the EBITDA was a bit disappointing on a year-on-year basis. It was down about 13% to 60 crores, with margins contracting to 26.5%. The casino gaming revenue was at 214 crores. This is despite the fact that their flagship casino, Delton Royale, was non-operational for close to a month. They also started the operation of Delton Zuri in South Goa. Online skill gaming revenues grew to about 47 crores. The losses here, though, have come in higher at 1.7 crores versus 0.6 crores. The company has said they will further strengthen their leadership position in online skill gaming. Hospitality revenues at 16 crore rupees, with the losses contracting to about 1.7 crore rupees versus 4.89 crores. The management as well said that the Delta Tech IPO is on course sooner rather than later, and that they are looking at building up their overall margin profile and online gaming revenues down the line.
Let's move on and talk about India Mart Intermesh. Sumit, this one is trading at a 52-week high today. What is the upside you're looking for this one? What are the target levels that we should keep an eye out on?
Yeah, after a so long quiet sessions, almost you can say after a year, it has broken its resistance zone, which is around 4850 to 4900. And after the breakout, it was in the consolidation zone. So today it has given a good breakout. We are expecting the levels of 5800 in the coming sessions. Current market price is around 5280. So the previous resistance zone is acting as a support now. So 4850 can be the stop loss, and 5800 can be the next levels to watch.
Right, moving on, Ashesha, Sula Vinyas. Why is this one in news?
Counter is in focus on the back of operational updates that the company posted yesterday post-market hours, but the stock is soaring in trade today. In fact, it is gaining over 10% as we speak. Own brands net revenues have seen an uptick of about 15% in the quarter gone by on a year-on-year basis, while wine tourism business segment has also seen an uptick of about 18% on a year-on-year basis. For the full year, net revenue from own brands stood at 482 crores, while revenue from wine tourism stood at about 45 odd crores. The company has also said that it has recorded its highest ever annual revenues in the year gone by, for both the segment's own brands as well as wine tourism. So, on the back of strong operational data that the company has reported, the stock is soaring in trade today.
Okay, there you have it. That's Sula Vineyards. Moving right on then to stock number 14 and Vemakshi. Why are the textile stocks in focus today?
Well, Aman, all these stocks are in focus on the back of a note that has come in from B&K. They're highlighting that they've gotten more constructive on this sector. In their opinion, demand has bottomed out, and in fact, they're expecting to see a sequential improvement in the as far as demand is concerned over the next few quarters. The utilization levels have started improving. Apart from that, a sharp slowdown in capex has lowered net debt for most of these companies. Now, they do believe that the companies have the ability to scale up and add capacities, and this is important for India to take the market share away from Bangladesh as well as Vietnam. They believe that weaker cotton prices have supported EBITDA margins and in fact lowered the working capital requirements for these companies. They see sequential improvements ahead for the sector, and in fact Indian spinning players are competitive, but they believe that they lack the ability to add value to yarn. Garmenting on the other side, garmenting has been quite resilient, and order book has been quite strong since September 2022. So on the back of that, KPR Mill is their top pick, target price at 643 per share. They also have a buy rating on Vardhaman Textiles as well as Arvind. Now for Vardhaman Textiles, the stock, the target price is at 350 per share, while for Arvind the target price is 107 per share. And given that news flow, we do have all these textile counters in focus. Look at the up move that has come in on Arvind Limited, up nearly 7% as we speak. Vardhaman Textiles is also up 2%, but KPR Mills unfortunately not reacting to that, trading flat as of now.
Let's move on and talk about RHI Magnesita on the charts. Sumit, this one surely seems to have picked up pace in the last 1 month. Would you say it's an attractive buy at current levels?
Yes, we can say so. As per the technicals, the stock has reversed from the previous support zone, that is around 570 to 580, and currently it is making a W pattern also. So it is a perfect retest candidate. Today, if the stock is giving the close above the 640 levels, so it looks good. There is a gap in the upside between the 700 and 745 levels. So these levels can act as a targets also for the coming sessions. So one can keep a stop loss of 600 and accumulate the stock for this gap filling.
Let's move on and talk about delivery. Yes, we had spoken about it yesterday, talking about how there is a bulk deal actually happening in delivery. Now we have the names of the sellers coming in as well, and that is Tiger Global Management owned fund has actually sold 1.36% stake in the company. That is, the stake is worth around 388 crore rupees. When you look at it, they've sold the fund which is sold is Internet Fund 3 PTE Limited, which is a investment management company which is managed by Tiger Global Management. On the back of that, today we've seen that delivery is in focus today, down almost 1% in rate.
Alright, let's move on and let's talk about Dalmia Bharat and why this one is in focus. Is on back of a brokerage note. You have Citi that's come out with a note on Dalmia Bharat where they've upgraded the stock to a buy rating from a neutral stance, and they've also gone ahead and set a target of around 2,500 rupees per share on Dalmia Bharat. They are saying that better costs and inexpensive valuations. They're also saying that the EBITDA per ton can expand on cost. However, the pricing is muted. They're also seeing more clarity emerge on the core business focus, and therefore Citi has gone ahead and hiked FY24-25 EBITDA estimates largely on lower costs for Dalmia Bharat. The stock has actually reacted to this brokerage note in the morning, but now it's fizzled off from those elevated levels, trading flat with a negative bias as we speak.
All right, let's move right on then and Sumeet discuss another buzzer within the pharma space. That sector is looking really smart today. And there's Dr. Lalpat Labs. It spiked up a solid 3%. Do you believe it's just a flash in the pan move? Sumeet, your outlook on Dr. Lal on the charts?
Yes, sorry. The stock recently got a good downfall. But if you will see the previous 15 to 20 sessions, so it has made a base around the levels of 1800 to 1780. and currently the amongst the lab companies, it is showing the good strength due to the recent cases of the corona also. So it is showing the good strength in the, so 2020 and 2160, these are the two levels which we are watching for, and one can keep a stop loss of today's low only, that is around 1870 levels, so it looks good.
All right.
All right, let's move right on then actually and focus in on the next newsmaker, Cheryl. That's Vedanta in the spotlight, as now we understand that US hedge fund, that's Farallon Capital Management, they're in advanced negotiations to fund $1.5 to $2 billion to the cash-strapped mining billionaire Anil Agarwal. This is after the discussions with the Vedanta Group's traditional foreign lenders or Gulf entities like International Holding Corporation. Now, according to reports, the structure that's been worked out involves part of the funding, $800 to $900 million against corporate guarantees of Vedanta Limited, and for which RBI approval is currently awaited. The remaining payout will be offshore to Agarwal's promoter entities, according to those reports. Together with the dividend income, the funding lineup is going to help the company meet its refinance obligations, pare down their overall indebtedness, and the terms of the new structure financing agreement are still being finalized, likely to see tenors of 3 to 5 years, but rates will be higher in the range of 15 to 16%, similar to the previous $750 million Oaktree loan facility that was subscribed to by Anil Agarwal via the share subscription agreement.
Okay, let's move on to stock number 20 for today is HDFC Bank. Ashesha, why have you picked out this one? What's the news for?
Yes, in fact, we had SBI a couple of days back on the same peg. SBI was in focus on the back of fundraising plans, and so is HDFC Bank today. The bank has gone ahead and informed the exchanges that they will be meeting on the 15th of April to consider raising of funds. Bank proposes to raise about 50,000 crore rupees by issuing perpetual debt instruments, Tier 2 capital bonds and long-term bonds. This will be done on private placement basis over the next 12-year period. So on the back of these fundraising plans that the company has informed the exchanges about, the stock is gaining in trade today. In fact, 1.5% higher in trade for HDFC Bank as we speak.
Right, that is HDFC Bank for you. That is in focus in today's trading session. But how are the charts for Gujarat Pipavav looking like, Sumit?
The stock is getting the rejection on the same resistance area, that is around the 120 levels. If you see in last few months, the stock has gained from the 70 levels to 120, and this rejection is showing some more weakness. So one can keep a stop loss of 107 already. Anybody holding, if breaks the 107, then we are expecting more downfall till 100 levels. So better is to booking profit here.
All right, there you have it. Looking at booking profits, that's the word coming in on Gujarat Pipavav. Moving on then, Vemakshi, let's discuss some of the other newsmakers, Aavas as well as Cholamandalam.
Well, absolutely. These are NBFC stocks and they are in focus on the back of a brokerage note that has come in from Citi. Now, Citi has highlighted that NBFCs, being wholesale borrowers, should react positively to any change in rate outlook. They believe that it is different this time, not interest rate, but it is the competitive as well as the regulatory fears that are dragging the performance for these counters. Their preference in the sector remains Chola Investment as well as Aavas Financiers, and they see intensified competition in core product segments. But they believe that the rate pause is expected to incrementally provide confidence as far as their NIM trajectory is concerned. So given this note, we have Aavas Financiers as well as Chola Investment in focus. As you can see, Aavas Financiers is trading higher by around 3%, while Chola Investment is down nearly 2%.
Okay, Sumit, you picked out one of the names from that as Chola Investment. So what is the chart looking like for this one? Do you like this one?
We have got two views here. One is for the swing trade. Now on the daily time frame, if you will see, 2 days back it has formed a negative pattern also, and today we are getting the confirmation of that negative pattern. So closing below the low of yesterday can drag till the levels of 800. But if we see the chart on the weekly time frame, so these levels can be accumulated as on the higher time frame. That means on weekly the RSI is also supporting. So use these dips and keep a stop loss of 760 levels. On the higher time frame, we are expecting the targets of 916 and 940. So according to the trader or investor, one can keep these levels. One can use these levels.
All right, so that's the take coming in on Chola Investment. But on that note, we slip into a break on this edition of Market Fatafat. But when we come back, we'll continue taking you through all the stocks buzzing. So don't go anywhere.
Back with Market Fatafat, holding out for the equity markets. It's a gain of 0.5% or so on the Nifty Bank Index as well. Let's bring on board Nirav Cheda as well, who's joining in on the show on the technicals. And Nirav, discuss your first pick. What are the charts looking like for IGL?
Thank you so much for having me again. For this talk, it was a long consolidation and a painful one because everyone expected this stock to do very well post that breakout of 400 that it had, but it went in a snooze mode. In between that 400 and 450 odd levels. But finally, 450 has been broken above in the last week, and in this week you are seeing good consolidation breakout pricing happening. I believe this stock can go up towards that 550, 570 odd levels. This is a good level to enter this stock from at current levels. 460 is the stop loss, and around 550, 560 is where try to book your profit.
Okay, keep an eye on those levels for IGL. Let's move on and talk about Tata Motors. Now, this stock is in focus as well. Actually, we have a note that is coming from BofA. It was overall on an India strategy Q4 expectations. Now, what they say and believe is that they actually think that Tata Motors will in Q4 will have the strongest results in the Nifty, and overall for the Nifty they expect the PAT growth of around 15% on a year-on-year basis and 8% excluding finance. They expect Tata Motors, Bharti Airtel, Cipla and Industrial to be among the top performers and best results, strongest results coming in over there. So surely we will be keeping an eye out on Tata Motors numbers. But yes, on the back of this also we're seeing a positive up move already coming in for Tata Motors.
All right, let's shift focus then to the entire AMC SPAC, because you have BofA who's come out with a note on the entire sector where they're saying that they have turned bearish on Indian AMCs with earnings cut and recommendations of downgrades. If you no doubt the stocks are actually performing on the opposite side, healthy gains coming in for the AMCs today. But what BofA is saying that the AMC sector has gone through a plethora of regulatory changes over the last 4 years with margin preservation, with significant pass-through to distribution. They are now seeing significant risk to margins from the proposed regulatory changes and escalating competition from the passive fund. So they have gone ahead and they've said that they are seeing earnings cut by about 2 to 13% for the AMC category. They are seeing also price target cuts by about 17 to 26%. They've downgraded HDFC AMC, Aditya Birla Sun Life AMC to neutral, UTI AMC to underperform. They're saying HDFC AMC looks better positioned versus the peers to handle the regulatory changes, given its scale and potential market share gains on the back of strong recent performance of its scheme. But however, contrary to the note, you can see that BofA, or rather all the AMC stocks are buzzing in trade.
Okay, there you have it. Those are all of the AMC stocks. But moving on then, we've got stock number 26, Reliance Industries, in news today, as the company has initiated the process that could see the group actually unlock value in the back-end warehousing and related logistics assets. This is of the retail business through an InvIT. This is according to sources. Now, Reliance Retail has already started laying out their groundwork for this proposed InvIT. This is of their warehousing assets. They've registered a trust, Intelligent Supply Infrastructure Trust, with SEBI at the end of February. And this trust is going to house all the warehousing assets that the group does plan to monetize. Now, though it's preliminary in nature and it's only according to reports, the details are being worked out, and they're going to structure the vehicle as a privately placed or as a listed InvIT, and they've begun the work with the legal advisors. So we'll be watching out for this, and not just that, they've also set up this intelligent supply chain infrastructure, and that's likely to be involved in the management of the assets that are housed under the InvIT.
Let's move on and talk about Aarti Industries on the charts. Nirav, after a very long period of time, I think the last couple of years, we've not seen anything great in terms of returns for Aarti Industries. Finally, some bit of green is coming in, some pace that it is picking up. Is that here to stay? Is it the right time to enter this one?
Yeah, so in the last couple of years, the stocks from the chemical sectors have all witnessed selling. Post that good run up post COVID. This stock was no different. It came down from about 1200 odd to 500, and a lot of selling has taken place in this stock. But I am seeing good consolidation happening around that 500, 520 levels, and then a consolidation breakout as well. Good volumes also have happened at the lower end. I believe this stock has made its low. Now there is a good chance that this stock will run up very quickly, at least up to that 600, 620 odd level. So look to buy the stock for that target with a stop loss of 520. The whole group, the RT group, is seeing good buying, and this buying is not for a day or two. It looks like a medium-term buying with the volumes that it is seeing. So, it can be a good buy from current levels, this one.
All right, moving on. Ashesha, let's talk about Jubilant Food. Why is this counter in focus today?
Well, yes, this counter is in focus on the back of a brokerage note that has come in. Citi has maintained its buy rating on the stock and they've given a target price of 619 rupees per share. The stock currently trades at 430 odd levels, so Citi is betting on a 40 to 45% upside from the current market price. They say Jubilant's recent underperformance was led by weak results. Inflationary trends in raw material is why company reported weak set of numbers, but they believe most inflation issues are transitory in nature and brand's long-term growth trajectory continues to remain intact. So on the back of this note that has come in from Citi, where they've given a target price of 619 rupees per share, the stock is surging in trade today, 2.5% higher for Jubilant Foodworks.
All right, watch out for that stock in trade. But Vemakshi, let's put the spotlight right back to large cap banks and IndusInd Bank as a newsmaker.
Well, absolutely. This stock is in focus after it has been revealed that the company's FII holding, which includes promoters, has reduced to 63.5% versus 65.9% earlier. So we're definitely seeing that the FII holding has gone down. And despite the sell-off, the FII investment headroom still stands at around 14.19% as per IIFL. Now, keep in mind that the minimum FII headroom required for MSCI inclusion is nearly 15%. So given the March 2023 shareholding details, the inclusion of IndusInd Bank in the MSCI index has been ruled out, and that is the reason why the stock is declining in trade today. As of now, it is down nearly 0.3%.
Okay, let's talk about HDFC on the charts, Nirav. What are you looking at in terms of technicals? It doesn't seem to be too far away from its 52-week high levels. So what are they looking like now? Is it the right time to enter this one?
So it's been a very long wait, particularly in this group of stocks as well, where these stocks were the darlings of the markets 2 years back, where every stock used to go up. So having said that, you're seeing good buying taking shape in some of the group stocks now. HDFC Limited is no different. At this point of time, a flag kind of a formation breakout has been witnessed in this stock, and that breakout has come in at around 2680 odd. This stock is now moving up and is picking up steam. It can go up towards the 3000, 3200 levels very soon. So look to buy the stock at current levels. 2680 should be a stop loss. Also remember, lot of shorts are in the system for this particular stock, and a lot of short covering has happened as well. So it's a double bonus. So look to buy this one with a target of around 3000 to 3200.
Okay, let's talk about CSB Bank. Now, this has been gaining since the last couple of trading sessions, and this is especially coming in post its Q4 update, which was a very strong update. In the last 1 week, when you look at it, it's gained almost 4 or 5% in a trade. Now, what is in terms of the update? Just to take a roundup of it, because the bank's deposit grew by a healthy rate of 21.4% on a year-on-year basis. On a sequential basis, also they've seen a strong growth of around 8%, coming in at 24,500 crores approximately. Within the term deposits also grew by around 24.1%. Overall, there's a growth in advances, excluding the loans as well, and that too was healthy at around 18%. So healthy update that has kept the stock a buzz since the last couple of trading sessions.
All right, Neerav, let's put the spotlight on Laurus Labs. Just like Divi's Laboratories, this one also is soaring in today's trading session on back of healthy data that has come out. But on the charts, do you think Laurus Labs is now making a reversal from the downfall that it's seen, almost 44% down in the last 1 year?
Yes, so if you see, from August 2022, every month this stock is down at least 10-15% from the previous month, and which is not a very good sign. In fact, it halved from 600 odd to about 300. But finally, you're seeing some green coming in this stock, and lot of buying has gone in the last 5, 7, 10 trading sessions. Good volumes were seen, so I generally try to look for reversals, and I am seeing a very good reversal here with volumes, and it was also broken above its 50-day moving average, which was around that 310 odd level. So I believe this stock is headed higher. Whatever the news comes, I don't know about the news, but it should move up. This stock can come up towards the 380 to 400 band, and it can come very soon, looking at the selling that has happened. So it can be a V-shaped recovery for this stock. Look to buy the stock at current levels. 310 should be your stop loss, and you can get a target of around 380 to 400 soon.
All right, let's shift focus. Let's put the spotlight on Eicher Motors then. And why is this one in focus? Is because Macquarie has come out with a note on Eicher Motors. No doubt the stock is trading higher in trade today, but Eicher Motors has downgraded the stock to neutral with the target at around 3,258 rupees per share, which is much higher than where the stock price is put at right now. They've cut the FY24-25 earnings estimates by about 12% and 10% respectively. They are saying that discount to the historical average is warranted given the slower earnings growth outlook for the company. Despite the downgrade coming into a neutral stance, you can see the stock is trading higher by 2.5% because the target that's set by Macquarie for Eicher Motors is 3,258 rupees per share.
Moving on then, let's discuss more pharma stocks. And Neerav, why does Zydus Life make it to your list?
Yeah, so pharma as a pack has started to do very well in the last 3-4 weeks, and this week has been no different. A lot of buying has gone into pharma stocks and chemical stocks. However, for Zydus, in the last 2-3 months, it had already witnessed a breakout and then a good consolidation. I believe this stock is headed higher. It's a slow pattern, but these patterns, you are actually witnessing a slow movement on the upside, but there is a sure movement on the upside. So look to buy the stock at current levels. Slowly but steadily, it will come up towards that 550 to 600 band, and you can keep a stop loss of 480. It will take time, but it should move up. So look to buy the stock at current levels. The overall chart is very good.
And steadily, but will surely move up. That's the word coming in from Neerav on Zydus Life. But Milind Karmarkar also spoke about the pharma space. He believes that pharma could do well in the coming years. Let's go across and listen into that snippet.
Long back, when I say long back, it was in the 90s that I had met Dr. Reddy himself. And I was asking him that what should I look at when I'm looking at a pharma company, in the overall environment. And he had told me that time it's per capita income. The reason being that in India, the per capita income that time was so low that people didn't have enough money for their daily needs. So he said that unless and until daily needs are taken care of, no one is willing to spend on medicine, howsoever essential it may be. Things are changing now. And I think the rise in per capita income will be a key to success in pharmaceuticals. So besides, of course, the other things. So I think pharma is, and I have always believed that pharma is a sector which depends on rising per capita income, and because of rising per capita income, higher consumption. So pharma could be interesting over a longer period of time.
So
yes.
Between hospital and pharma, because you have exposure to hospitals.
Yeah, I have exposure to pharma as well. Okay. So we are bullish on both of them.
So one just buy a basket of MNC pharma stocks because they are a pure play on consumption. I mean, let's say whether it's a Glaxo or Aventis,
yeah,
they are pure play on Indian domestic OTC stroke the prescribed drug sales.
Correct.
Is that a better idea to buy?
So I could have a MNC pharma in my portfolio, but I think the domestic pharma have a few other legs as well. One of them being the exports. Okay. So that opportunity is not there in MNC pharma. So that is the reason why I would like to bet on an Indian quality pharma stock before taking a look at the MNC pharma stock.
All right, let's get a move on then and continue to talk about stocks that are buzzing in trade. And there's Paras Defense that's in the news today. And the shares have surged quite significantly in trade today. And this is on the back of the news that the subsidiary, that's Paras Anti-Drone Technologies, has signed a pact with Mumbai-based Space Kawa Explorations. This is an agreement for the indigenous development and deployment of space intelligence, surveillance, and reconnaissance and payloads, which will include RF wideband software defined radio. Now, the stock on the back of that news is a buzz. It's come off from the top of the day, but still higher by about 1.5%.
All right, but let's talk about high flyer, and that is L&T. No doubt today it may be subdued in trade, but L&T hit a fresh 52-week high in yesterday's trading session. Nirav, and do you think that the road ahead is only bright for L&T, given the fact that there's a lot of auto wins also coming its way?
Yeah, so the whole sector, the capital goods sector, if you see, it consolidated for the last 10 years, and now, almost everyone is witnessing breakouts, and almost all are witnessing 52-week breakouts. So I believe this sector as a whole should move up, and this is the leader of the pack. So most definitely this stock will also move up. In the last week, as you said, it witnessed a very important breakout above its all-time highs. Around that 2270 odd level, and post that it has gone up. It is retesting that breakout at 2270 odd, so it's at a good level to buy again. I would be a buyer in this stock, so look to buy this stock at current levels. On the lower end, 2200 is a good support area, so that should be the stop loss. And this stock can now move up toward the 2550, 2650 odd levels, which can be the near-term target for this stock.
Okay, keep an eye out on those levels for L&T. Let's talk about Lupin. Why? Because Lupin Diagnostics has actually launched a regional reference laboratory in Bangalore, and this is mainly for strengthening its presence in the southern India. Now, this new laboratory marks a significant step towards Lupin Diagnostics' mission to provide accessible as well as affordable diagnostics and preventive health services across India. The regional reference laboratory complements the company's existing network of 25 laboratories and 410 collection centers across India. On the back of this, we've seen Lupin has been buzzing in trade with the whole of the pharma pack, which has also been showing a sharp up.
Okay, there you have it. That's the view coming in on Lupin, but let's focus in then, Ashesha, on Indian hotels.
This counter is in focus at the back of a brokerage note. In fact, JP Morgan has come out with a note where they are maintaining their buy rating on the stock, and they've given a target price of 330 rupees per share. They say fourth quarter operational data was quite strong. Fourth quarter domestic revenue per room trend looks pretty strong. They expect the company to report a robust revenue trend in the fourth quarter of this year and in the first half of FY24. In February, India occupancy crossed that 70% mark for the first time since COVID-19 pandemic. They say sequential strength in industry revenue per room is much better than expected, and hence for now they've given a target price of 330 rupees per share. The stock has recovered from the lowest point of the day. In fact, it is now inching towards that highest point of the day mark, holding on with gains of 0.5%.
All right, moving on, Nirav, let's talk about Electron Engineering, and off late this one seems to be picking up steam.
Yeah, so again, capital goods stock. So there is one peculiar thing in this particular stock is after a 12-year period, this stock has witnessed a breakout above that 400 levels, and very importantly, this stock after that 12-year period is consolidating, and that consolidation breakout has also been seen now. So the pace at which it is going to move in the next few days will increase. It's already seen today in the last 2-3 days as well. I believe this stock is headed higher and very aggressively at that. So it can go up towards that 550-600 levels and very soon as well. So look to buy the stock. It can take a month or so to move up another 30-35%, but it will be a good return. If you look at the period of time that you get that return. So look to buy the stock at current levels. 415 should be the stop loss, and around 550-600 should be the target.
Okay, keep an eye out on those levels for Electron Engineering. Moving on, let's talk about Spandana Spurti. Now, the board has actually said that they will be meeting on 14th of April, mainly to consider the raising of funds. This is going to be mainly through issuance of non-convertible debentures on the private placement basis. And we've seen that Spandana Spurti is actually saw gains of almost 1% in trade around those levels as of now as well. But yes, holding on to some bit of a gain there.
All right, let's get a move on then. And at number 41, Vemakshi Tube Investments as well is a newsmaker.
Well, Avan, the stock is gaining momentum in the trading session today, and this has come in after the shares of Tube Investments have actually risen by nearly 2.6% to 2,644 rupees. This, in fact, is the highest level that the company has seen since March 2023. And apart from that, Tube Investments has risen to a 3-week high on the back of block deals. The rise in the steel tubes and strips maker has come after nearly 3.2 lakh shares have changed hands in 2 blocks at a price range between 2,597 rupees to 2,603 rupees. So given those block deals, Tube Investments is in focus. In fact, it is trading near the day's highest point, up nearly 2.5%.
All right, moving on, let's talk about Heritage Foods. Nirav, if you look at this particular counter, only one way down, YTD performance, almost half, 50% downside coming in for this particular counter. But only over the last 1 month, this one has seen an uptick also. That could be because of the dairy prices also seeing a spike.
So actually there was some rights issue in this stock, and that is why you're seeing such a big fall. In fact, it has consolidated in the last 3-4 months. It hasn't seen a big fall actually. So I believe this stock is at that breakout level of around 175. It touched that breakout level in the last week, but it couldn't break out. I believe it should break out very soon, looking at the volumes that it is seeing. Also a very good reversal from the 150 odd levels, which is a support area. So this is the third time it is taking support from those 150, 145 levels. So look to buy the stock once that breakout comes in above 175. It can go up very soon to 220, 225 odd levels, which can be the target. And post that breakout, 160 should be your stop.
Okay. Ashesha, then why have you picked out SBI Live for us today? What's the news for you?
Well, yes, this one is also in focus on the back of a brokerage note. Goldman Sachs, in fact, has come out with a note where they are maintaining their buy rating on the stock with a target price of 1,520 rupees per share. They say they've lowered their FY24-25 APE and VNB estimates by about 7%, but they like SBI Live for its leadership position in both market share as far as profitability. They say that their FY24-25 VNB estimates are 7 to 11% above consensus estimates. They have reiterated their buy stance on the stock. They've given a target price of 1520. It's on their conviction list with an upward revised target of 1520. So on the back of this note that has come in from Goldman Sachs, the stock is soaring in trade today. In fact, it is now trading at the highest point of the day.
All right, moving on, let's talk about Puravankara because it's come out with its Q4 update where they're saying the Q4 sale value saw an uptick of about 21% on a year-on-year basis, coming in at around 1,007 crore rupees. They say the average price realization was higher by about 14% to about 7,768 crore rupees. This is during FY23. They're expecting the pre-sales growth momentum to continue, and this will be driven by a healthy pipeline of new launches. They're also saying customer collection from real estate business increased to about 2,258 crore rupees in FY23 on back of really good positive commentary as well as a good jump in their pre-sales in the quarter gone by. You can see Puravankara trading higher by about 3% as we speak.
Okay, watch out for Purvankara. And at number 45, yet again, you've got some of those metal stocks in the spotlight. Ashesha, why is that?
Well, yes, in fact, steel stocks are the ones that we are talking about. They've already risen 10 to 15% year to date. And now JP Morgan believes that they do not see any further upside, at least in the domestic steel prices. Coking coal prices, meanwhile, have declined nearly 25% from the peak that we saw in the month of February, which means that spreads have now increased. JP Morgan believes that spreads could now sustain about that $200 per ton mark. As far as demand is concerned, domestic demand is quite robust. Export inquiries have also started picking up. JP Morgan sees that they continue to see scope for consensus earnings upgrade. The relative underperformance of Indian steel stocks is why they are bullish. They are maintaining their overweight stance on both of these counters, Tata Steel as well as SAIL, and both of these counters are buzzing in trade today, 0.2% higher in trade for both of these stocks.
Let's talk about Ami Organics on stock number 46, and why is that so? Because Elara Capital has initiated coverage on Ami Organics, given a buy rating, and a target price that they've given is 1,335 rupees per share. That's Elara Ami Organics for you all on the back of this brokerage note. Now, that's almost a 41% upside. Now, why do they like the stock? One, they believe that the huge domestic and global opportunities actually is beginning to play out for Ami Organics. Other than that, they believe that the expanding capacity will meet the future growth for the company, and overall they expect Ami Organics to register a revenue growth of around 27% over the next couple of years, and with the commissioning of the Ankleshwar plant also, that will furthermore add to its growth as well. They believe in terms of the value for Ami Organics on the discounted cash flow basis, assuming a 5% terminal growth rate and 11% cost of capital growth rate, with an average EBITDA margin of 20.6% over the next couple of years as well. Keep an eye out on this one. They're quite positive on this one. They've initiated coverage with a buy rating and a target price of 1,335 rupees per share.
All right, and that is the 46th stock for you, and that is the last stock on this edition of Market Fatafat. Thank you so much, Nirav, Sumit, as well as Ashesha and Vemakshi for joining us on the show. And with that, it's a goodbye from Vinny, myself, and the team that put the show together. And Avan, I'm very sorry. Avan, it's your mistake, Avan. From the entire team of Market Fatafat, thank you so much for watching. Closing trades coming up next.